Welcome back to Winning on Taxes. A couple shows ago, we talked about the first step in compliance, which is filing your tax returns. If you don't file your tax returns, the IRS doesn't know how much you owe, and they're not going to give you any kind of deal. So we really did take a deep dive about filing your tax returns, but that's only the first part of two about compliance. So really, compliance is helping people get on track so they are straight with the IRS and they are meeting their ongoing obligations, their tax obligations. So the first one is file your tax returns. Second one is pay your taxes. And so if you don't pay your taxes, it doesn't matter how much you file. If you keep owing year after year, you have to stop owing. So again, from Liar Liar, the famous line when his secretary asked him, and this is when Jim Carrey has to tell the truth, and he tells him, so and so needs your professional advice. He just knocked over an ATM and got caught. And he picks up the phone, and Jim Carrey yells into the phone, "Stop breaking the law, bleep." But really, it is at some point, and you've got to figure it out. And I know it's different. You're not knocking over a tailor. You're not an ATM machine or robbing bank tellers. But everybody has to file taxes, and you need to meet your filing and payment obligation. So we're going to kind of talk about that. So it really is filing compliance and payment compliance really is based on how often you file your returns. So we're going to dive into that. So this is just to do a quick review over filing compliance. It is if you had a filing requirement. So if you had enough income, $15,000 for an individual, $30,000 for a couple. If you made less than that in taxable income, you don't have to file. If you did have more than $30,000 as a couple or $15,000 as an individual, and remember, Social Security is still taxable. So a lot of these forms of income that people don't think are taxable really can be taxable. There's a few exceptions, but not many. So once you are filing your tax returns, it depends on what kind of return to what you need to focus on for payment compliance. So one thing we talked about was getting the last 6 years of returns filed. Currently from 2019 to 2024 and 2026, it'll be 2020 to 2025. And 27, it'll be 21 to 26. They keep moving it forward. January 1st of every single year is where it changes. So there's very few reasons to file older returns, mainly to replace something the IRS or a state filed for you. And that does happen more often than you would think. So payment compliance is a little bit different than what you might be thinking about. So, and I've seen this so many times. One case, the guy was making millions of dollars, and he was paying hundreds of thousands of dollars on his tax bill every single year, and he didn't feel like he was getting anywhere. And I can't tell you how many times taxpayers have expressed this frustration to me. I'm paying, and I'm not getting anywhere. I feel like a hamster on a wheel. Well, there's a simple reason for that. You're paying the wrong way. So really, you need to switch things up, and you can get a much better deal from the IRS when you switch things up and you do it the way they want you to, and it's also the way that will save you the most money. So when I say want you to, that's looking at the overall perspective of the IRS. The IRS really wants taxpayers to learn to be good little taxpayers. You're like a cog in the machine. You file on time. You pay on time. No problems, no fuss, no muss. And the problem is life gets in the way. There's hiccups, there's burps, or people that just don't want to do it. Or life gets in the way and they get behind a little bit and they bury their head in the sand. So how do you get back on track? And that's really what we're going to talk about, is the best way to get back on track and the easiest way to do that and why. So the problem with paying on the oldest tax returns, that's what the IRS will always apply your payments to, is the oldest tax returns, unless you designate otherwise. And people don't know that. You get a pick where your money is going if you're making voluntary payments. If you're paying on an installment agreement, it'll always go to the oldest year, which doesn't help you in the short term. But in the long term, we're going to talk about how to break the cycle and help so that you can not only set up a resolution, but save a lot of money doing so. So stay with us, and we're going to be right back after this short commercial break and answer all these questions on how to get this straightened out in a way that benefits you the most.